Payday lending has come under serious criticism of late, not least for their dealings with small companies, and regulators have recently tried to stamp out unethical and uncompetitive performance. With me is Simon Featherstone, Bibby Financial Services Global CEO, to talk about the future of the receivables finance and invoice finance industry. Well, Simon, in short, what's the difference between a high street bank and Bibby's Financial Services?
We are a lender that takes its own decisions and frankly has a lot more credit appetite than traditional high street bank.
You come from a banking background. You were formerly the MD of Lloyd's TSB Commercial Finance. How is the banking industry changing and how do you foresee it developing?
What we're going to see is a lot more innovation in simple terms. We're already seeing, both in London, not far from here, and in other parts of the world, a huge investment in what's known as fintech, the financial technology combination of lending products. So we're seeing a huge amount of innovation, and frankly, that'll be led, in my opinion, by people who are not part of banks. I think banks themselves will really struggle with a combination of regulatory pressure, their own internal politics and policies, and pressure on costs to create the kind of innovation that will give the solutions that the customers need for the future. And I think old-fashioned banking's dead, to be blunt.
So you see receivables finance playing a greater role in the future?
I think receivables undoubtedly will play a greater part. The whole industry, though, does need to change. It needs to simplify its product offering. What you'll find in the receivables industry, both in the UK and in other parts of the world, its client satisfaction scores across the board are very, very high. What it doesn't do a good job of explaining its proposition and simplifying its terms and how it operates.
Well, in perhaps very simplistic terms, your industry could be described as a sort of payday lender for small companies, which has of course come under a lot of criticism. I think Bibby in 2012 even admitted to unethical practices with brokers. So how regulated is the industry?
I'm not sure I agree with that. What most people, and again that's something that the industry's done a bad job of, is explaining the balance between the funding it provides and the service it provides with it as well. And the two costs for those things can often get blended and be mistaken as a pure lending cost. The industry itself's taken in the UK significant steps forward to regulate itself.
Well, of course, at the start of this year, 2015, there was a new regulation put in place that borrowers would only ever have to pay back double what they initially borrowed. What kind of impact will this have on the receivables industry?
The codes that were put in place for payday loans were aimed specifically at consumers. We're lending to businesses. You find that the services of the receivables industry are split between the lending aspect of what we do and the service aspect of what we do, whether it be bad debt protection, and of course the cost of that can depend on the quality of the customers that our clients are selling to, together with the number of invoices we have to chase and allocate the cash on, and all the other services that get wrapped up into receivables lending as well.
Well, what sort of percentages or interest rates do you charge?
Typically you'll find a borrower will be borrowing between 3 and 4% over base, very similar rates that you find with any other form of lending in that type of space. The service charge that we'll pay will depend on the volume of invoices, the number of debtors, whether they take bad debt protection and so forth.
The financial crisis must have really boosted your industry with a reduction in the availability of business funding and tightening of credit terms. How much does ethics play in your business? Ethics
plays a huge part of it. I mean, we're part of a 206-year-old family business involved in everything from the oil and gas offshore industry to haulage and distribution to retail cost-cutter franchisees in the UK. So Bibby's a very, very broad spread conglomerate. It's been around a long time, and clearly when you've been around that long time and lived through many, many wars, recessions and so forth, you've got to have operated with a huge amount of integrity and standing to be able to have survived all of that. So for me, I mean, integrity has no need of rules.
Now, you have said that we might be headed for another financial crisis if we're not careful. Why do you say this?
We see invoices from our small business customers and our medium-sized business customers first, before anybody else does. In previous recessions, I've seen the recession in my statistics before anybody else does. And I think we may be starting to see a period of deflation across the UK and Europe. I also think the number of new lenders that are entering post all the quantitative easing and the printing of money that's taken place in North America and the UK is quite remarkable on a scale I've never seen before.
You're an advocate of increasing interest rates. Surely this is just so more business will go your way?
I don't think regulators and central banks look enough at the psychology of individuals when they're thinking. The longer we tell people interest rates will stay low, the longer they can put off the investment decisions knowing it's not going to cost them any more. And if, as we're seeing with prices not rising as well, all that does is push out investment decisions into the long grass.